Hello dear viewers, hope you all are doing well. Welcome to revision time. In our previous video, we studied about accounting equation and solved few of numerical problems based on our accounting equation assets is equal to liabilities plus owner's capital. And in our today's video, we will be studying about classification of accounts. So basically, accounts are classified as traditional approach and modern approach. Under traditional approach, we classify accounts as personal account, real account and nominal account. And under modern approach, we classify account as asset, liabilities, expense, revenue and capital. Let us first deeply understand and study about our traditional approach and next let us move towards modern approach. Under our traditional approach of accounting, accounts are classified as personal account and impersonal account. Under impersonal account, we have real account and nominal account. So basically, it means that traditional approach is classified in three accounts, that is personal account, real account and nominal account. Further, personal account is again classified in three accounts, that is natural personal account, artificial personal account and representative personal account. In simple, first one we have natural personal account, and in simple to understand, this account is account related to human beings like yours and mine. We can speak of Ram's account, Sham's account, Geeta account. Accounts which is related to personal, which is a human being account, is known as personal account. Next we have artificial personal account. Artificial personal account are the accounts which are not human beings but can work like human being, which have separate legal existence in the eyes of law, like firm account, bank account, cooperative societies, partnership firm, hospitals. All such comes under our artificial personal account. Next is representative personal account. Under this account, this represents both our natural and artificial persons. Here under this account, we have mainly like outstanding and prepaid income or expenses account. Next we have real account. So real account is the account which retains the ending balance at the end of accounting period and then carry forwards it to next accounting period. So real account is the include our assets account and liabilities account. Our assets account like our cash account, building account, furniture account. Our liabilities account, we can speak of note payables account, wages account. All such comes under our real account. Next is nominal account. Account which is related to expenses, income, gain and losses is known as nominal account. Account which is related to expense, income, gain and loss is known as our nominal account. So this is about our three types of account: personal account, real account and nominal account. And now let us study the rules of debit and credit based on these account, which are golden rules of accounting. Now let us take a look on the golden rules of accounting that also revolves around our debit and credit. So there are three main rules of accounting, that is debit the receiver, credit the giver, which is under personal account. Under real account we have debit what comes in, credit what goes out, and under nominal account we have debit all expenses and losses, credit all income and gain. So here comes our modern approach of accounting. We know that under modern approach of accounting we have asset account, liability account, capital account, expenses account and revenue account. So first asset, before we understand about the rules of debit and credit here, let us quick revise about our asset, liability, capital, expense and revenue. So as we have studied that our assets are possessions or properties or businesses holding of business owns. These are the economic resources which help the business to carry out the normal operations of business. There are two types of assets we know, that is current assets and fixed assets. Next we have liabilities. So liabilities is the amount which the entity is responsible to pay for the outsiders. Again, we know that liabilities are of two types, that is current liabilities and non-current liabilities. And capital is nothing but the money bought into the business by the owner is known as capital or owner's equity. Next we have expenses. So expenses is nothing but the cost incurred. Cost incurred or the money spent by business to earn the revenue is known as expense. And our expense is the money earned by the business by carrying out the course of activities, by selling goods or rendering various services. This is known as revenue. Now let us understand how is this modern approach of accounting different from our traditional approach of accounting. Under asset, when it is something related to asset account, increase in asset is debited and decrease in asset is credited. Increase in asset is debited and decrease in asset is credited. Under liabilities, it's reverse. Increase in liabilities is credited and decrease in liabilities is debited. It's reverse here. Next, capital. Here, increase in capital is credited and decrease in capital is debited. Expenses account. Increase in expenses is debited and decrease in expenses or losses is credited. Next, revenue account. Here, increase in revenue is credited and decrease in revenue or gain is debited. This is our modern approach of accounting. Asset, increase in asset is debited, decrease is credited. Reverse for the liability, increase in liability is credited and decrease is debited. For capital, increase in capital is credited and decrease in capital is debited. For our expense or loss account, increase in expense or loss is debited and decrease in expense or loss is credited. Revenue, increase in revenue is credited and decrease in revenue is debited. These are our rules of debit and credit under modern approach. So this is it for today's video. We have studied about both traditional and modern approach of accounting. Under traditional approach of accounting, we classified accounts as personal account, real account and nominal account. And under modern approach of accounting, we classified account as asset account, liabilities account, capital account, expense account and revenue account. And if you have any confusions or difficulty in understanding any of these concepts, please reach out to us in the comment section and we will solve them at earliest. In our next video, we will be taking up examples to understand more about traditional approach and modern approach of accounting. Until then, happy learning, signing off.